Hello, I'm called Jingweneli, and for today we are going to be joining Mr. Stephen's class. But before we do so, make sure you subscribe to the channel, and you also have a notebook near you to jot down important information. So, beginning off, I would like to enlighten more on a transaction which was confusing most of you. That is the sale of goods for cash. Now, with this, if I'm to take an example, like if I'm to sell goods for cash of 8,000, how will I treat this? Now, me basically, when I'm dealing with double entry, I always use Alice as my method of computing, or of dropping different transactions on the debit or the credit, and also there are reasons why. So this is what I do with the Alice. A stands for the assets, then L stands for liabilities, I stands for income, uh, C stands for capital, and E stands for expenses. Now, with this, A and E at both ends, I always debit. That is the assets and expenses. Then with the ones in the middle, that is the liabilities, income, and capital, I always credit. So what is happening in this transaction? So whenever you're dealing with the transaction, you must know what is happening and what will be the reason why I'm debiting and crediting. So I get to know that I'm having cash. So I sold goods for cash. So meaning that cash as an asset, it is increasing. So I'll go on the debit side of cash, of the cash account, and I drop there my 8,000. Then when it comes to the sales, uh, I get to know what's happening. Remember, I told you with the Alice formula, all the liabilities, income, and capital is put on the credit side. So sales, with the sales account, sales is inviting in an element of income. So once income is coming in when you have carried out sales, that means you will credit. So yeah, that is the reason why I'm going to credit the sales account. It's because income is coming in. So with you knowing that, you can carry out different transaction with the reasons why. So on both sides, I'll be having 8,000 on the cash account, and then on the credit side of the sales account, I'll be having 8,000. And with that, I would have completed my double entry rule. So having said all that, let's join Mr. Stephen's class, and we are going to be beginning off from the effects on owner's equity. So let me log to Zoom, and we join the class. So with that, this is an example which was given in class, which you can also carry on and try out. So let me try to summarize this or talk about it. Now with the chart of account balance, when they say, some of you are asking about the normal balance of an account. So when someone talks of a normal credit balance, it means that that account will always increase on that side, yeah, either on the debit side or the credit side. So since they are saying here that an account usually has more increases than decreases, so the normal balance of an account is on the increase side of the account. So what does it mean? It means that for the assets account, it's having a normal debit balance. That's why you're saying normal balance on the debit side. That means to increase on the what? On the debit side. And liability will always increase on the credit side. Then owner's capital account will always increase on the credit side. Then owner's drawings account. Now this one, it's an expense account. It will increase on the debit side. And revenue account, it's like it's part of the capital. Then it will increase on the credit side, and then expense account, it will increase on the debit side. So you can also use the formula of Alice to get to know their normal debit balances, because with assets, you're seeing all assets are increasing on the debit side. That is, I told you already, with the A and E you debit, and in the middle you credit. That is with Alice. So having said all that, make sure you subscribe on the channel. Yeah, and thank you so much for listening in and also watching.